Okay, what's going on? What's going on? Today is Sunday, July the 20th, 2025. And what I'm going to be going over in this exact video is going to be the DRC, so the daily recap for Friday, which would have been 7/18/2025, right? So 7/18/2025 was Friday. So I'm going to go over, what we ended up doing, how we ended up taking those short positions, and just some nuances because I almost tricked myself out of the move just a couple times because I was just like, man. But I'll point out some key nuances with timing, right? Location, context in this video where you can go back and see if you notice these same nuances when you're taking your trades. Now, you guys already know that we use the DRC video. Obviously, you guys know me personally. I fill out mine very extensively, right? So we'll kind of just remove the pen here, kind of show you guys remember the document that we're using here, right? So you guys do have access to this free document. What I want you guys to focus on when we're going through these videos is the key times, right? 8:30 a.m. for me, Central Time Zone when the New York opens. That 9 a.m. time, kind of like that 30 minutes to good 15-minute closures after that first, open. 10 a.m. about midpoint of my session. 10:45, are we up? Are we down? Where's the markets? About 11:15 for me is when I'm clocking out, and I'm not really making that much more execution wise, I guess, decisions. And then 12, usually we're rolling into that lunchtime. Either, we're scaling risk, like trailing risk up, or we're out of the markets, or we're reviewing that New York recap. Right. And so this will give you guys an idea. Obviously, day type was bearish. And then you start um, categorizing these day types, right? As draw on liquidity, 15 5-minute mitigation, shorts, like different things, right? So as we continue to make these videos, like I said, just go through this. Go through this when you're going through the videos, and maybe it'll help you out as well. So I'll kind of point out throughout the video um, what areas I really focused on, some of the new drivers, set up expectations, etc. So first, what we're going to do is we're going to jump right into the document. Let me share my screen here. Okay, cool. So what we're going to do here first is just share this document. And what I'm going to do is kind of go over, the bias of the morning, some key drivers that I thought were very, that really kind of affected what we were wanting to see. So let me pull that up. Okay, so I'm pretty sure, let me make sure you can see this on the screen too. Pretty sure you guys can see this, but I'll just kind of zoom in just for a second. Um, but the goal, pre-market read, my football players, pre-snap read, what we were expecting to see since we were at all-time highs, and and I'll show you guys how price was coming into New York. We were expecting to see a draw on liquidity higher, right, on the high of day and the overnight liquidity, and then that would be setting a new all-time high on NQ. We had key levels of 23. Obviously, our key level was a daily level, right? 23,260 was a daily open. Obviously, the 50 level, 23,250s. And then our target level and our one of our key levels of the day, if we sold down, was to see what would happen to buyers would step in around 23,200, 23,150s. Right. And then we wanted to possibly see price extend down to 23,120s, 100s to get into the higher time frame demand. So let me kind of just give an idea of what that looked like. Okay. So when you look at it, is this 1 hour? Okay, cool. So when you look at it like this, okay, you had, make sure the screens look good. Cool. Okay, so when you look at it, you had the levels, right? This is what we had seen pre-New York, just to kind of give an idea in that pre-snap read. I've read the replay mode. So in that pre-snap read, this is what you're seeing. And I always look at everything. I read books from Larry Williams and Market Wizards and different books. I look at things the way we read, right? From left to right, right? Because that's how you read. You don't want to look at charts from down, from basically from, what am I trying to say? Horizontal, vertically, right? You want to be able to look at them in a line like this. Is that horizontal? Is that vertical? No, it's vertical. Excuse me. Horizontal is what I'm saying. You don't want to line them up as because how your eyes actually read the charts. Okay. And so what I was seeing before New York Open at 8 a.m. in my pre-snap read, this is all you could see, right? So you had to have an idea, of a bias of what could happen. Now we were if you look at it here as well, from a 1 hour perspective on replay mode, I want to show that here really quickly of what that price action looked like. Because you want to start getting your eyes familiar with the same time frames, right, over a period of time, right? Regardless of what people say, that's just what I believe personally, and that's what I've experienced is, I look at from top-down analysis, I go from, monthly, weekly, daily, 4 hour, H1, 15 minute, 5 minute, 1 minute. That's it. I don't go to 3 minutes, 2 minutes, all the other stuff. And I'll explain another time why I do that and like where I got that information from books. But it's just more of a synchronistic type thing with when it comes to the candle closures and how many candles actually build up specific candles, right? Okay, so how it looked, right? This would have been 7 to 8. And so when I'm looking at the markets, this is what I'm looking at. Whoa, 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 whoa. I was like, why did I do it again? Hold on. That would must go back that far. So, okay, let me go back here. Okay, so what we were looking at going into the market, right, was this would have been what it looked like, right? And so we can kind of do this to kind of show too. All right, so it looked like this on a 15, it looked like this on a 1 hour. So guys, I want you guys to, if you don't have this photo already, let me pull this up over here. Some trading documents. So something I want to show you guys where you want to use as a tool, okay? What I'm going to do, I'm just going to pull it up. I need to have this already pulled up before. Okay, so you want to look at the markets. I like to use the 4 hour, 1 hour, etc. But I have all these here in front of my desk. But you guys can always just go to Google and print this off. But the market moves in 4 phases, okay? And so when you look at these 4 phases, let's look here. I'm just going to take a screenshot of this one. Mm. Okay, so the market moves in 4 phases. So if you guys can see that, right, these are the 4 phases. So you want to always kind of be able to look and see where you're at. Are you inside one, accumulation? Are you inside of a market effect, like a continuation trade? Is price making higher highs and higher lows, right? So a lot of times when price is going sideways at a low area, that's accumulation. A lot of times when price is going sideways at a high area, that's distribution. All right. So you want to know where you're actually at in the phase of things. So I think it's safe to say, right, when you think about the overnight price, right, and you think about the previous day low, which would have been down in here, 23,050s, it's safe to say that we would rather see price distribute down. Why would we want to see price distribute down? Right? Because think about it, guys, from the week, and I'll go over this in my weekly recap later today. You guys can go and see it. But when you think about the week, and this was Monday, right? The manipulation happened on Wednesday. So you guys see this here. You got to understand that individuals, especially like on CFD, your NAS 100 players, etc., right? Those individuals for the week want to take profit. And when those individuals want to take profit, right, sell orders have to fill, and you have to have buyers willing to buy at a higher price than the buyers at 23,000, 20,100, 20,150s, right? And so when you see the crown forming going into New York, right, you have the FU candle. Guys, I don't know. My mentor, Jordan Morgan, taught me this. And I'm doing this and don't take it any kind of way, right? But when you can go up to your camera and give it the FU, right? And you can put that on your computer screen, right? That's when it's time. Especially in a 1 hour, 4 hour. That's when that crown's forming. That's when it's time for price to probably start to break down. Those individuals that are buyers, right, are going to take profit and they're looking for a willing buyer at a shit price. Okay. That's how my mind was working going into New York. So now when you look, couple things, that we'll talk about, like we have the bias, we have some expectations right now. When you look at New York Open, something that happened in pre-snap, right, 825 into 830. So right before New York, right, what did they do? Let's jump into a smaller time frame here really quickly. See if I can just bring this one on over. Okay. So a 5 and a 1 minute. Let's really dissect the open. First, let's go 5 and 15, then we'll dissect smaller time frames. Okay. But when you go to that 5 and 15 here, you can see at that New York Open, which would have been here, you guys see I have it identified as NYO right here at 22,000. So one thing I want you guys to notice is price leading into New York Open, okay? Because price leading into New York Open, what do? They rallied the shit out of price, right? Right here, 820. So you guys see the bottom, 825 into 830, and they took the high of day, right? So they took the overnight trader, like that's what we wanted to see, but I wanted to see it at New York, but it was pre-New York, which is fine. They took those individuals out, right? So anybody that was willing to buy right there at New York Open was a noob, right? Because they didn't realize the higher time frame perspective of the fast push-up candle taking out the overnight traders, right? That's what you're looking for, is a 15-minute fast up candle. And on a 1 hour, right? This is a mantra, and I'll explain it to you guys later too. But a 1 hour wick of liquidity of highs like that, you're looking for a 15-minute fast up candle and a 15-minute fast up candle, 5-minute fast up candle, and mitigations on 1 minute to play back down. I know that just because, like I said, I've seen these setups multiple times. So that was something you wanted to definitely take notice of, is that pre-market, you already had this. All right, so let's kind of show this before New York Open even opened. They had already ran liquidity. They had already generated FOMO into the trade. Now let's regress just a little bit as well, right? Because what do we talk about all the time when it comes to the document, right? When you go back to your market review, 7:30 news context, I told you guys that's when they usually manipulate people, is at 7:30 going into the 8:30 equities open, right? So something I had seen right pre New York is something that most people probably didn't even realize or identify, but I do, right? Is the news price, right? The 7:30 news price open, which that 7:30 news price open was right here, right? So you had news price open right here. Now think about this, guys. This is crazy to think about, because this is why it made such beautiful short positions for that morning. The individuals, or if you took a buy, let's just say for example, if you took a buy here in this area, that pre-New York, right? Where do you put your risk most likely? Right under that previous low, right? Something like that. You would put your stop, like a stop losses started building under the news low, under the early FOMO player low, right? So what do you get right before you open? Rally. So those individuals who bought 7:30 of that news, right? And played remember the 4 phases we talked about again, really quick, right? Because the market moves in 4 phases, right? So let's focus on that accumulation phase. That's what we were starting to see, right? And so this to me was price accumulating, right? I used to mark these up, the whole thing like this. So price was accumulating and popped out and delivered a new shift in price delivery and new highs. That 7:30 player with that type of move, think about it. If you go from 7:30 to just even those highs, you're looking at 50, 60 handle plus move hitting that target. That's a great day for some traders, right? That's an amazing day. So you would think that those individuals, like I said, would be taking profit. Okay. And so that's what we ended up seeing here. We've seen that price go and do that pre-New York. Now, what do I look for, right, after this, right? Where is my focus at after a draw on liquidity, right? Especially if I believe that, from where we were in the week, that buyers were going to take profit and shorts would fill, and they needed buyers, a noob or a novice trader, to be buying at the highs of the week to be able to fill those orders so that we could get out of those amazing buys, right? That buyers need that, right? And so, bam, what did they do? They came down. New York opens, first candle right here. Let's kind of walk through this on a 5 first. Right, first candle of New York, sign of weakness. This is what I love to see, right? Because you got the first sign of weakness. They're dragging in more buyers, right? And then the next candle, right? Because I'm always talking about the next candle after the sign of weakness was the one that started to press down. Now, if you go and look at a small time frame, that's where we found the 1 minute entry, right? So we're jumping into a 5 and a 1 minute here, okay? And so when that price, there was a 8:30 open, price rallies back up, was kind of looking like they wanted to go higher because this candle closed higher. Then you had 8:34 to 8:35. I always pay attention to the first minute close, the first 5 minute close, and first 15-minute close. Right. So 34 to 35, sign of weakness on that 1 minute, and then price came back up 8:35 into supply. Now you have two options right here. This is what I did, right? What I did was I took a short Price went down here, came back. I started taking shorts right in here. Okay. Now, where did I put my risk was the key. And this was the hard part, though, because I was like, well, I really like to personally put my risk in any situation in alignment with HOD or prior bar. And so when you actually frame up, you're looking, because we're going to, we want to be thinking in probabilities at all times. When you're sitting here and you've got an entry from like around, I have to look exactly, let's just say 94s, and you have a risk to here, that fits my game, right? Because I talk about 15 for 45 is a 1-3, 20 for 60 is a 1-3, right? But now here's what was making me a little hesitant on the setup was the fact that I wanted to have the edge, right? And at 26-point risk to 25, well, 26, but 25-point risk, depending on where you got in, based on where I got in, it was a 25-point risk, okay? And so there was a 25-point risk to the highs. I'm only going to go into a situation like that with one contract across the 5 accounts. Now, if it was a 20-point risk, I may go with 2. And if it's a 10-point risk, I'm going 3 or 4, possibly even 5 contracts across all the accounts, right? Because that's the differentiator of an A plus setup to me, B plus, C plus, or or C, whatever, right? And so this was my whole dilemma. Like I said, was that, and this is something I can improve on, was my risk placement. I should have used prior bar instead of using that much extension, if that makes sense. But let me explain why it worked out. Having that risk placement in those areas, because if you fast forward after New York opened. So this is what price did. We ended up selling here, putting our risk at the top, which we didn't even need. So does that make sense now? Like we didn't have to go past our game of 16. We could have used that prior bar high. We didn't need to use the full HOD. Okay. And so let me show this here, for example. You have this trade here. And even if I don't use the 25-point risk and I just use the risk that I wanted and would have sized in a 2 contracts, even when the price comes down and taps that daily open, we're watching more like support and buyers, stop losses build at 23,250. When price came back up, right, this was the moment, 848, 849, like that 850 time, to get this edge and not have to worry about the HOD, right? Area, because I was looking at multiple time frames that day, but when you look at a 5-minute, you did have prior bar, right? Prior bar high to HOD. So this was the exact location that aligned with the 1-minute supply candle high, which was fire. So basically I had a really good trade on Friday, but what could have made something go from good to great was what I'm showing you right there. That's the difference, right? Is risk placement, right? I could have had a little bit better risk placement. And here's the reason why I got pretty excited, okay? Is now when you have this trade and you have the risk placement as price starts to move in your favor, you can start to trail down based on specific rules or however you do it, right? And so when you go back and fast forward or rewind to like right here, right? No one knew, like we know news is an excuse to take out traders, etc. No one really knew that 9 a.m. was going to pop like that. But one thing I can show you is if you're focused on edge, right? Because a lot of traders, like I was watching Twitter, I was watching different things in the group chats, and individuals, when they seen this break of this level here, they wanted to short inversion plays down, right? Because they could see it easy, right? They could see the easy trade, right? But when you think about it, ask yourself this question. Most people shorted here, and why did they get yerked on this next play? Because they're trailing, they don't have good trailing risk rules. They don't have experience with this, okay? Because when the price closed lower for me as a technical, what did I do, right? The risk that I had at the daily open, that 25-point risk, I was able to scale down to prior bar, right? Which is the risk I originally wanted. And when this price comes in and flashes like crazy like this, boom, you guys see how it flashed up? All it did was run into 1-minute supply, right? So people that shorted too late and waiting and hesitating, and then the ones that try to just do that short where they push it and just push with the market and go lower, they destroyed them. Of course they would. But when you're looking left, I want you guys to see this. Think about this really quick. Supply candle, price shows weakness. People start trailing risk, people start adding orders, doing all kind of stuff. Rip city of supply, but they never break the edge. They never break the edge, right? And so that trade was still good. Then we had price follow, and I just personally waited right here. Were our buyers going to win here, right, at daily open, because that happened in previous day, which I'll go over in the weekly review, but not right now. And so I was like, I'm just waiting. I'm going to hold myself here. Now, when we got this closure right there, immediately, guys, immediately, right? I had a risk of here. Now I'm condensing that risk down to here, right? To right pretty much where my order is, right? Right on these highs. And as price started to fall, right? We used to have those higher time frame areas that we wanted to see, right? So now I've walked you guys through pretty much where we found the first entry. Price came up and mitigated, which we could have added into the order here. But this happens a lot of the times. It's never going to move down the first move and really probably give it to you. They're going to scare the shit out of you, pull back, make you either give back your order or have to re-enter another price, because people just don't have edge on the 5 minute 15. They only look at like 1 minute 100 tick charts, right? So that's how we found the shorts down. Okay. And then when you start looking at some of those trades, do this. When you start looking at some of these areas, I mean, this was a beautiful 15 5 minute setup to go down to the lows. Okay. So I want to kind of show what it looks like now from a 15-5 perspective, right? And where we were targeting on an H1, right? So this goes back into my bias. So we found the shorts inside 15 5 minute supply after a draw on liquidity, which is very key, right? Overnight price getting drawn on, right? We understood what we were looking for order flow wise. Now, when that price started to break down, right, I had to end up covering the position as the market made money available, somewhere down the 23, 210s, somewhere in here. I can't remember exactly where, but price comes down 23.2, shifts back up and like somewhere in that area, and then it started to show more lower pricing. Now, my targets on shorts, what I wanted to do was go from H1 15-minute supply candle here on the left down to the demand, right? And so when they came into the imbalance here, 23,180, and those shorts, you start to see a halt. It goes low, comes back up, bounces back to VWAP, equilibrium, 50% of the range, whatever you want to call it. Boom, new lower low, right? I'm like showing you guys on the left side. So now when I seen this low, so like lower low here, I'm anticipating maybe a pullback into these areas and then just kind of a fall over back into demand. And what you're seeing, just so you can kind of have an idea of like what could happen for next week, is you're starting to see buyers defend the 23,200 level, and shorts are, just kind of sitting there on their hands. Like, is price going to go lower? Will I get objective lows? Will we push down into demand, et cetera, back into that range? Or should I start to cover, right? AKA buy limits, buy orders filling, right? Should I start to cover because I don't see this going any lower right now? That's essentially what happened, right? So beautiful sell side day when you're talking about a 15 5 minute 1 minute setup, right? And attacking those that crown forming area, that higher time frame area, that understanding, like I said, buyers. We needed buyers up in this area to take on to want to buy, right? So that our shorts, so buyers can take profit, right? You need a noob to buy at a higher price so that you can have it better, right? So that was really good. And then, like I said, throughout the rest of the day, once we made that low at noon, sorry, at lunchtime, pretty much people were done. And you just started seeing slow grind, 15 5 minute, mitigation plays that just continue to hold this level 22,200. So, really quickly here, I think the most important thing was today, just the nuance was understanding that the 5 minutes before New York Open, right? You don't want to really take setups, me personally, until after that open because you're waiting for manipulation, you're waiting for draws and liquidity of a novice new trader to be able to take advantage of that setup. So, really quick, some of my notes when it comes to one thing I learned today is just making sure that I'm positioning inside 15 5 minute supply and then using the proper risk placement for that edge. Okay. And then the main one that you guys are going to see when it comes to you're doing a daily recap is the changes that you need to make from today, right? So some of the changes I need to make from today was the one I just shared with you guys. Making sure I get that 15 5 minute 1 minute risk placement in alignment with the edge and my rules. And then, using prior bar instead of HOD in some situations. So what I mean by that is when I was in that 5 minute, oh yeah, okay, cool. When I was in that setup here is instead of here on a 1 minute, so I know you guys like that 1 minute to see it. So when I was in that 5 minute fast push up candle and I had the opportunity to put my risk right at HOD or prior bar, right on 5 minute, I could have used the 5 minute prior bar for sure. Right? Because if it goes any higher than prior bar at that point, price was probably going to be bullish, right? And I could have accepted they'd be playing my game. I'm not playing theirs, right? So the further along I go past, 20-point risk for 60, like probability setup, I start to play into their game. Okay. So I think that was one of the biggest things is just the risk placement using prior bar. And then the easy money play. That's the one thing we're going to go over for the day, right? The easy money play. So what does that mean? Every day you come into the markets, win or lose, you want to be able to identify, for me personally, right? A 1 to 3 setup. Okay. And so at least a 1 to 2 for my funded traders, because a 1 to 2 can take you a long way, especially with consistency over time. But for me, I'd say the easy money play of the day was the draw on liquidity, because this is the mantra that I play, okay? A 1 hour wick is a 15-minute, 5-minute fast up candle slash mitigations. So like you had a 1 hour 15, so like a 1 hour, your 1 hour looked like this, right? Wick. We're looking at this wick right here that took the high. So there's the wick. Then what'd you have on a 15? What did that wick look like on a 15? Inside of a 1 hour wick that draws on liquidity, you want to identify a 15-minute fast up candle. Okay. Why do you want to do that? Now let's go into a 5 and a 15, right? Because I play 15 5-minute setups, right? You have the 15-minute fast up candle. Now what are you looking for? What did I say? 1 hour wick, 15-minute fast up candles, 5 1-minute mitigations. All right. So do you have a 15-minute fast up candle? Let's identify this really quick. Yes, you do. Now, here's the one thing that really matters about this candle. Does it draw on liquidity? Right? That's the key to the whole thing, right? Of locking a trade like this in. Do you have a 5-minute fast up candle? Yes. Do you have mitigations on if you were to go to 5 and 1 minute inside of supply candles? Let's look. Right? I'm pretty sure that's mitigations, guys, right? Inside the supply candles right here, right? You got this is a mitigation, price falls, price mitigated again, right? It's just very fast and manipulative and then falls, right? So that's price manipulation, that's price mitigation inside 15 5-minute, 1-minute supply. So pretty good day, right? When it comes down to it and what you're looking for the sell side. And there was a really good day to see some nuances of what they want to do pre-market, right? So don't feel like you have to be in before everyone else, because most likely they're going to take that person out. Okay. So yeah, that was Friday for NQ. I don't think I really have very much else. Like I said, I'll be dropping the end of week recap where we go over the 1 hour and 15 and just the 5 and kind of look at some of the key areas and look at what we're potentially seeing for next week. So I hope this helps with the understanding of just identifying the short side. I hope that you can just go to Google, right, and download this image here. And if you don't already have the daily recap uh, to follow, right, then definitely get it, because I'm going to start doing a call here in the Discord here soon where I'll do the pre-market read live, right? You'll get to trade live with me for the actual session. And I may even possibly start doing my market reviews. I'll probably never actually do my market reviews live like this, just because that way I can focus and get to the things I want. But the pre-snap read and actual live execution trading, there will be access to that inside the Discord. So make sure you have this, because like I said, you'll be able to have your bias, your key levels for whatever you trade, new drivers coming into it, 8 a.m., 8:15, like 8:20, and setup expectations, right? And we'll start helping you build your playbook of high probability setups. So with that being said, I appreciate you guys watching. Definitely leave anything in the comments that could add value, or I can articulate this message any better. And I appreciate every one of you guys. Have a good rest of your day.